Hi there, this is Praveen again. In today's video, I'll be talking about payroll in Canada. You start a business, and as you grow, you may be hiring employees. With this comes the responsibility of setting up payroll for your employees. You have to make sure you pay them correctly and also meet all the requirements of the CRA. Here are the steps you'll be taking to set up payroll for your employees. To begin with, you must open a payroll account with the CRA. This will be a 9-digit business number followed by the letters RP followed by a 4-digit reference number. This is the number you'll be using to communicate with CRA for your payroll needs. Now, how to open a payroll account? You must have the following information to open the payroll account with CRA. Date employees received their first wages, the months covered for the payroll, type of pay period, for example, weekly, bi-weekly, or monthly, and the number of employees. Now I'll discuss what you need to do when you hire an employee. You need certain information from that employee. For example, the social insurance number, the date of birth, and the address of residence. There should be documentations to verify this information. Also make sure that the SIN number does not start with 9 because this could mean that the employee may not be employable in Canada. The next thing you need to do is get the form TD1 filled out by the employee. This will determine how much income tax the employee wants to get deducted from his or her paycheck. On each payday, you as an employer will be making certain deductions from the employee's gross pay. Taxable benefits like company car, accommodation, or cell phone will have to be added first to the gross pay before you make those deductions. Typical deductions would be income tax, EI, and CPP. But there might be other deductions you might be making, such as union dues, RRSP contributions, and healthcare plan contributions. Income tax is deducted by using table provided by the CRA. The CPP contribution for 2021 is 5.45% of the gross pay, and you as an employer will contribute equal amount to that amount. The EI contribution for 2021 is 1.58% of the gross pay, and for employer it is 1.58% plus 1.4 times of that, or 2.21% of the gross pay. Well, you made deductions from the employee's paycheck. You're holding that money. What do you do with that money? You have to send it to this government because that money does not belong to you. What you do is send that money along with your contributions as an employer to the CRA by the deadline. Usually this is the 15th of the following month. Now the CRA will usually send you a remittance form, but if you're a new employer, you may not get that. That's okay, nothing to worry about. What you do is, along with a letter explaining your situation, send the money with a check or money order, whatever it might be, along with your name, address, phone number, and your payroll account to the CRA. But make sure it is done by the deadline. If you fail to make the payment by the deadline, you may be subject to a severe penalty. So make sure you avoid that penalty by sending the money in time. At the end of the year, the employer will issue T4 slips to all the employees. The T4 states the employee's gross pay and the various deductions that were made during the year. Besides this, the employer may be required to submit a T4 summary to CRA. This summary gives the following information: employment income before deductions, Canada Pension Plan contributions, employment insurance premiums, income tax deducted, taxable benefits, and employee and employer information. Now, the T4 summary may not be necessary if you're filing your returns electronically. But if you're doing paperwork, yes, you'll have to submit a T4 summary. Now, all this information is really pretty straightforward. But remember, as an employer, you should be focusing on running and growing your business, not on payroll. By paying a small amount of fee to Markham Bookkeeping and Taxes, you would be able to focus more on your business. And also, this fee is tax deductible. So really, it's an investment, not an expense. Thank you.